Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is September 28 and we're starting from euro-dollar pair with Jakub Novak. Weak data on Germany's leading consumer climate index indicated that nothing could be expected from the German economy in the fourth quarter of this year. Slower growth in London in the Eurozone also poses a negative sign. Today, there will be a report on Germany's Consumer Price Index and the Eurozone's Consumer Confidence Indicator. Inflation growth, or a less active reduction, will be reasons to sell the euro, as will negative forecasts in the Economic Bulletin from the European Central Bank, which will be published closer to midday. For long positions, buy euro when the quote hits 1.0525 and take profit at the price of 1.0550. Growth may occur after very good data on inflation reduction in Germany and a positive forecast from the ECB. However, poor data from the Eurozone could dampen all buying enthusiasm. Note that when buying, the MACD line should be above zero, or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.0502, but the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.0525 and 1.0550. For short positions, sell euro when the quote reached 1.0502 and take profit at the price of 1.0474. Pressure may return at any moment, especially in such a bearish market. Note that when selling, the MACD line should be below zero, or is starting to drop down from it. Euro can also be sold after two consecutive price tests of 1.0525, but the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.0502 and 1.0474. The next stage of our review is the next major. It's pound sterling dollar pair. Ralph Shadler describes. The GBPUSD pair dropped as much as 1.2110 yesterday, and now is fighting to rebound. It's located at 1.2139 at the time of writing, and it seems undecided. The downside pressure remains high, so a broader rebound needs strong confirmation. GBPUSD is trapped between 1.2110 and 1.2153 levels. As you can see on the H1 chart, the rate escaped from the down channel pattern, signaling that the sell-off ended and that we may have a reversal. Still, it's premature to talk about an upside reversal as long as it stays below the 1.2153 former high. Jumping, closing and stabilizing above 1.2153 opens the door for a larger rebound. This could be seen as a long opportunity. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsoupas. Early in the European session, gold is trading around 1847, around 0.8 Muri, and bouncing slightly after it hit the low of around 1872 a level last seen in March 2023. This sharp drop of almost 75 USD in the last 7 days from the high of 1947 means the risk aversion of investors and the fears that surround it. According to the H4 chart, gold has reached extremely oversold levels. The metal is expected to see a technical rebound in the coming days, and the price could reach 28 Muri, located at 1906. Gold accelerated its fall after breaking the psychological level of 1900 due to the pressure of the US dollar index and the rise in the yields of the 10-year Treasury bonds that reached a high of 4.65%. These generated risk aversion, and investors left gold as a refuge asset and supported the dollar. There is a possibility that the price of gold will fall to the level of 1967, because gold left a gap on March 10, 2023 that still needs to be covered. This level could be the key for a strong technical rebound, and from that point, a recovery of the yellow metal could occur. On the other hand, there is a possibility that gold will rebound from the current levels above 1872, because that area is located at 08 Muri, which acts as a strong support. This level could offer an opportunity to buy, with targets at 1885 and 1906. The Eagle indicator is showing signs of an imminent technical rebound due to the oversold conditions. And now it's time for AUDUSD currency pair. Laurie Bailey would help us. Yesterday, the Australian dollar dipped below the target level of 0.6388, under pressure from the balance indicator line, red moving average line. Even if the price consolidates below 0.6388, this does not confirm the pair will fall further, as we'll likely see a budget crisis in the United States starting from October 2nd. Former US President Donald Trump urged Republicans not to back down before a shutdown and to pursue their goals. Current President Joe Biden acknowledged that he does not see a way out of the situation. The modern oscillator is not in a rush to delve deep into bearish territory, and this possibly indicates that the initial decline could be a false move. If the price consolidates above 0.6388, the first target will be 0.6514 and then 0.6612. On the 4-hour chart, there is convergence between the price and the Marlin oscillator. The behavior of the indicator lines is unremarkable. We can only wait for Monday. However, market participants are currently responding to the latest economic reports. Today, AUDUSD climbed after the release of retail sales data for August, which was up by 0.2%, and an increase in business confidence from ANZ for September. That's all for today. See you online soon, and good luck.